Think you really know trend lines? Nah. Most people, they're just drawing some random lines. That's it. 90% of traders make the same mistake. Jump in too early, exit too late, then blame the market. But here's the kicker. It's not the market. It's the line you're drawing. Get this right, and your entries change, your exits change, everything. Simple, clean, but deadly accurate. Trend lines look like the simplest tool in the world, but they tell you the real direction of the market. They show whether price is heading up, down, or just spinning its wheels.
With a single line, you can figure out when to jump in, when to wait, and when to do nothing at all. Here's the catch. A correct trend line is very different from what most people draw. And that tiny difference can make all the difference in your results. Let's get started. Tip 1. What a trend line really is. First, what is a trend line, really? It's not just a line. It's a map of price behavior. You connect points that the market actually reacted to. Not just any point, only the important ones. In an uptrend, you connect the lows, the higher lows, one after another. Higher low, that's when a trend really exists. Common mistake? People connect every tiny dip. No, that's just noise.
You need the lows that price bounced from, where it showed strength, built momentum. A trend line must show support, not just look pretty on the chart. If price ignores it, the line is worthless. A good trend line stands out from afar. No zooming, no forcing, no bending it to fit. If you're trying too hard, you've already drawn it wrong. Keep it simple, but keep it correct. What's obvious usually is right.
Tip 2. How many touches to confirm a trend line? Big question. How many touches do you need to trust a trend line? Minimum 2 touches? But wait, most people get this wrong. 2 touches, that's just a potential, not confirmation. With 2 points, you've just drawn a hypothetical line. The market hasn't agreed yet.
The third touch? Now things get serious. Price hits the line again, reacts. Now you can say, okay, this line works. You can rely on it. But here's a subtlety. Not all touches are equal. Weak touches, or just a tiny tap, doesn't make the line strong. Strong reactions, clear price action, powerful candles. That's when a line becomes important. More touches equals stronger line, but beware. A line tested too much can weaken, like a wall you keep hitting. Eventually, it breaks. So don't just blindly say, oh, it hit 5 times, it's perfect. No, check if the reactions are still strong.
Tip 3. Wicks or candle bodies? One of the most debated questions. Should you use wicks or bodies? Short answer? Neither. On their own. Wicks show rejection. Price went there but didn't accept it. Bodies show acceptance. Price closed there. Most traders pick only one. Just wicks or just bodies. But the market is a mix. A good trend line touches the points that matter the most. Not necessarily exactly on the wick or only through the center of the body. Sometimes using the wick gives you 2 touches. Slightly adjusting, 3 or 4 clean touches. Which is better? Clearly the latter. Rule? Draw your line to maximize valid contacts. Trend lines are zones, not lasers. A little wick poking through? No big deal. What matters is the reaction, not millimeters. Tip 4. Trend line slope. Steep lines? Danger. Ever see a trend line shooting straight up like a rocket? The steepest ones? Most dangerous. Why? They're unstable. A steep slope equals market moving on hype, not balance. And any hype move ends eventually. New traders?
They see the rocket, jump in, right at the moment the trend is about to die. Then what? Either a heavy pullback or a line break. Healthy trend lines, moderate slope. Not too flat, not too steep. Price can breathe, rises, pulls back, moves again. Rule of thumb, if it feels like price is sprinting, your line is probably too steep. Steeper means higher risk of break. So what do you want? A line the market can respect, not one that just looks nice. If you thought you knew trend lines so far, you've probably been doing something wrong. Most traders' problem isn't indicators or strategy. It's this simple line. From here on, we're getting to the part that ruins most accounts, where you think the trend broke, but the market is just tricking you. Miss this part, and everything we just covered is useless.
Tip 5. Uptrend versus downtrend. Uptrend equals higher highs, higher lows. Buy at dips, stop below the last low, wait for confirmation. Downtrend equals lower highs, lower lows. Sell at rallies, stop above the last high, follow the trend. Common mistake? Trading anywhere along the line. Nope, trends have rules and boundaries. Remember, don't buy a downtrend, don't sell an uptrend until the trend actually breaks. Simple rule, yet so often ignored. Tip 6. Real versus fake breakouts. Everyone hypes a trendline break. Wow, it broke! Time to jump in. Hold on. Most breaks are fake. The market is testing, tricking, hunting liquidity. How to spot real versus fake? 1. Volume. Real break equals high volume. Fake equals low or irregular. 2. Candles after break. Real equals strong follow-through. Fake equals reversal or close back inside. 3. Pullback after break. Real equals clean pullback, then continuation. Fake equals quick return inside the trend line. Golden rule, never chase a breakout blindly. Wait for confirmation. Patience equals money in the market. Tip 7. Time frame matters. Time frame changes everything. That line on a 5-minute chart might be meaningless on the 4-hour chart. Short-term trend is not long-term trend. Rule: long-term trend lines are more reliable, stronger touches. Short-term lines are more noise, more fake breaks. Common mistake: traders see only the short-term line, jump in, then the market laughs at them. Always check higher time frame. Long-term trend line is the reference. Short-term lines only fine-tune entry. Tip 8. Trend lines plus support and resistance. Combine them with support and resistance, and their power multiplies. Uptrend hitting a support zone? That low isn't just a low, it's a golden entry zone. Downtrend hitting resistance? High probability of a reversal. Mistake? Many draw trend lines but ignore key zones. Result? Weak entries, repeated losses. Rule? Trend line, path of movement. Support resistance, sensitive points. Together, real trading opportunities. Tip 9. Pullbacks equals best entry. After the trend line is drawn and price reacts a few times, best entry? Wait for price to pull back to the line. Why? Pullback equals market takes a breath, small correction, ready for next move. Common mistake? Jumping in on the breakout without waiting for pullback. Then stop loss gets hit fast. Golden rule? Wait for price to return. See a confirming candle. Then enter. Pullback equals low risk entry. No pullback? Gambling. Tip 10. The mistakes that make trend lines fail. Most traders don't lose because trend lines don't work. They lose because they use them incorrectly. The biggest mistakes are: 1. Drawing trend lines that are too steep. 2. Relying on only one time frame. 3. Ignoring key touches and confirmations. 4. Chasing every breakout without context. 5. Forgetting to combine trend lines with support and resistance. Remember, a trend line is not a signal. It's a tool that helps you understand market direction and make better decisions. When used correctly, it can improve your entries, protect your exits, and help you manage risk more effectively.
Trendlines may look simple, but mastering them is what separates random trades from structured trades. Use them correctly, and you'll start seeing the market with much more clarity. Found this video helpful? Like the video, comment your biggest trendline mistake, subscribe for more price action and smart money concepts content. And this is only the beginning. In the next video, we'll break down market structure from the ground up. You'll learn higher highs and higher lows, lower highs and lower lows, how to identify trend direction early, high probability entry and exit zones. Once you understand market structure, you'll never look at a chart the same way again. Thanks for watching, and I'll see you in the next one.